Hello everyone, Ugodre here, and this is my money brief. On today's money brief, I want to talk about inflation. So the National Bureau of Statistics just released its October inflation numbers, and from their post, inflation numbers rose by 16.05% in October 2025. Now, this is way better than the 18.02% that we recorded in September, which a lot of us thought was great, and even better than the 20.1% that we had in August. So we've gone from 20.1% in August to 18.02% in September, and now 16.05% in October. Now, I've gotten a lot of messages from some of y'all saying these numbers, is it real? I've also seen messages posts on social media from a lot of people also suggesting maybe, just maybe, there's something strange going on with these numbers. Well, here's the truth, and that's why we're here on Money Brief, because I'm just here to break things down for you. So, inflation numbers have been trending downwards for the better part of this year. And if I were to go back to January, we were at 24.5%. Now, that was a marked improvement from the 34.8% that we had in December 2024. Now, something happened, and what had happened was we had a rebasing in January. I'm sure some of you remember that I did a video about this rebasing. So we had a rebasing in January this year that basically changed how inflation numbers are calculated in Nigeria. So as you can see on your screen, there's a new basket, and that new basket is kind of different from what we had before. And that basket allocates different weightings to different food different things that we consume in Nigeria. And so that's what makes up the inflation basket. So rebasing is meant to happen every 5 years, but we hadn't had one in, I think, about a decade or so. So it made sense that we rebase. But there's a lot of arguments around how that rebasing was done or whether it was done correctly. I know, but you know what? This is what the number is. And so according to the NBS, inflation number 16.05%, better than it was last month. Now, if you look into that data, you would also see that we've seen inflation numbers on a month-on-month basis also in a way improve, even though in the month of October, inflation numbers month-on-month did rise slightly faster. I think it was 0.93 or so percent in October compared to 0.72% in September. So it actually rose slightly higher in October compared to September. That is month-on-month inflation. But it still means inflation numbers on a national average level of 16.105% is still pretty good. Now, again, let's not confuse things. Inflation is rate of increase. So it doesn't mean prices are going down. No, it just means prices are still going up, but not as fast as they were before. So the fact that inflation numbers is 16.05% in October means prices on a general level based on their consumer price index is 16.05% higher than it was last year. See? So it's still higher now. In September, it was 18.02% higher than it was in September last year. In August, it was 20.12% higher than it was in August the year before. So you see, so it still means prices are going up, but not as fast as they were. So, which is quite good because, we do need some bit of inflation, but the fact that it's not going faster anymore, it's not galloping, is fantastic. But on a month-on-month level, inflation is still going up, like I mentioned. So at 0.93%, it means prices are still going up month on month, which is quite closer. In fact, some people like to look at month-on-month inflation because it gives them an idea of where we are in terms of price. So the fact that prices are still rising month on month is still quite some concern, because at 0.93% means prices are rising faster than it was in September, when it was 0.72%. Nevertheless, 16.1% year-on-year increase is great. The last time we were anywhere close to this, if I'm not mistaken, was in April 2022, around the first or second quarter of that year, April 2022. That was the last time we saw anything less than 16.05% inflation. So you can imagine how far we've been suffering in terms of price increases. And you all know prices have more than doubled. In fact, in some cases, tripled over the last few years or so. Now, if you distill the data again, another truth you see in that data is there are also reasons why we're seeing inflation numbers rise slower than before. And one is exchange rates. You can all agree that's the truth. Exchange rate has basically strengthened this year. I wanted to use the word stabilize, but you know what? It's actually strengthened, because we've seen exchange rate go from 1.6 at the start of this year to about 1.450 or thereabout, depending on where you're buying from. So in a nutshell, with exchange rate strengthening, then you expect that to at some point filter into prices. Now, it doesn't mean that prices are going to go down. Remember, inflation is not price going down. It just means they would not rise as fast as they were. We all remember last year where everything was basically just doubling. So because exchange rate is more predictable now, it hasn't gotten to that 1,000 or lower than 1,000 that a lot of us want. But the fact that it's getting stronger, more predictable, it's a good thing for the economy, and that is also gradually impacting prices. Now, the second reason, which a lot of people will say, perhaps that's probably the reason why we're seeing prices go down, is what is called the base effects. I've explained the base effects a few times in my previous money briefs, and it's just where that consumer price index was last year versus this year. So, for example, if the consumer price index was 100 last year and the consumer price index is 116 this year, because last year prices grew faster compared to this year, then that base effects would obviously mean that inflation numbers would drop, because inflation number is usually the difference between a period consumer price index and a prior period consumer price index. So that is also another reason. Now, a third reason is energy prices. Fuel prices, like you all know, has been basically stable. In fact, it's been reducing in some areas. So yes, because fuel prices and mostly energy prices haven't actually been going up that much, businesses are not increasing prices as fast as they were. It doesn't mean they're not increasing, but they're not increasing prices as fast as they were. So that is also impacting the rates that you're seeing. And so for that reason, inflation numbers are not rising as fast as they were. So, I mean, even crude oil prices are falling below our benchmark budget. Crude oil prices averaging $60, in fact, in some cases less than $60 per barrel. So with energy prices going down, and that is also impacting, food prices in general. Now, a third and I think very important factor is food prices. Now, according to the MBS, food prices on a month-on-month level actually went negative, which means it didn't rise at all. In fact, they're basically saying that it dropped, right? Because on a month-on-month basis, food prices is 0.37%, fell 0.37%. In October, in September, it fell 1.57%. The last time it rose was in August, 1.65%. So food prices actually going down. Then imported food prices, which used to be very sticky. In fact, as of January, imported food prices on a month-on-month basis was 11.47%. I mean, I take that data with a pinch of salt, but that price has now also fallen to 0.35%. Now, even if you look at it on a year-on-year basis, which I guess other people also look at, food prices are now 13.12%. So we could see food prices go single digits by the end of the year. It's very likely that's going to happen. And we could see imported food prices, which is already single digits, continue to remain single digits. So it kind of looks like inflation numbers are basically falling aggressively. Now, one data that I do also pay attention to, in fact, probably would be the data that I look at the most, is core inflation. So core inflation is inflation numbers less food prices. I like that data the more because core inflation is really reflective of inflation numbers less volatile food price. Because food prices just go up and down sometimes. But core inflation is like core because they basically eliminate all those volatility. Hey, core inflation is still at 18.12%. So it's still higher than inflation. General inflation numbers are 16.05%, which could mean a lot for central banking. And I'm going to get to that in a bit. Now, guys, inflation numbers that I've just rolled out is national average. It doesn't mean that it's the same thing in your state or in your area. Now, inflation numbers in some states are actually way higher than national average. I can give you an example. In Ekiti State, for example, that's where you have the highest inflation rate, is still at 20% or so. Even in Lagos State, where I guess most of us live in, 16.9%. So it's higher than the national average. Now, I can go on and on and on. If you go to maybe Kaduna, it's at 17.5%, higher than national average. But there are some states that are actually quite lower than national average. In fact, there's a particular state that inflation number is about 10%, and that's Bauchi State. So they are basically knocking on the door of single digits. So the point is that you might be in some states and maybe prices are higher than in other states. It does happen. It's nothing new. It happens in most countries as well. So yes, while inflation numbers is 16.05%, that's national average. It could be higher where you are, or it could be lower where you are. Now, what does this all mean for going forward? Because at the end of the day, there's no point talking about inflation numbers if you don't know what it means for your pocket, man, or like your life. Because yes, you could be seeing all these headline numbers but look around you, your own personal inflation is not dropping, and that's really what matters, right? So there's something that's going to happen next. The Central Bank Monetary Policy Committee is going to meet for the last time this year in a few days' time. And when they do, they're going to make a very important decision, or they will need to take a very important decision. That decision is whether to cut rates or whether to keep rates or whether to increase rates. Now, my bet, and the bet of a lot of people, is that they will cut rates. Interest rates is currently 27%. So they did cut it from 27.5 to 27% for the first time in months when they last met a few months ago. This time around, we do think they will cut it now. By how much or how steep they will cut it, it's anyone's guess. But I suspect it's going to be aggressive, and they might surprise some of us with their rate cuts. Now, why do they need to cut rates? Well, look around you. Interest rates are falling. And I'm not talking about bank interest rates because that one doesn't fall like that. Interest rates for yields, like for bonds, bond rates. So whether it's the interest rate government pays to borrow money from you and I whenever they issue FGM bonds or treasury bills, or the rates that big companies pay when they want to issue commercial papers or their own bonds. So you're seeing rates really come down. And so it's just inevitable that the central bank would also need to cut their own rates down as well. So that is fully expected. So I really doubt that they will keep rates the way they are or they will increase it, because if they don't cut rates, then banks will continue to lend at high interest rates. So when CBN cuts rate, then interest rate that banks used to lend money to you and I will reduce, and that could further impact prices of goods and services, and that could reduce inflation rate better. At that point, I think a lot of us will start to feel the impact of these so-called inflation numbers that we're seeing fall. Now, I know a lot of the skepticism is also because, hey, the president did say at some point inflation numbers are going to drop to 15%. So are you walking to the answer? I mean, I don't know, but this is what the data says. And I would go by the data until I see something else. Now, we do see prices in some cases rise faster than the national average, but that's just our own small basket. So MBS is looking at a wider basket across the country. So got to give them the benefit of the doubt. They could have way better data than we do. And of course, they are the authority for data like this, so you have to go with your own data. So that is it in a nutshell, and that's truth about the latest inflation numbers. But of course, if you do have comments or you don't agree with something I said, I mean, drop in the comment section, or you can DM me, and then we can have a discussion around this. And if you think I should provide a bit more clarity, do let me know. Yeah, so that's my money brief for today. And until we do this again next time, do have a profitable day ahead. Bye.